Good morning, good afternoon, good evening, wherever you're at in the world. Thank you for watching, coming back if you're coming back. So this is going to be one of my investment videos. We do a lot of different videos on this channel. It's a wealth building channel for those who are new. And we try and do at least one investment video a week. And a couple career videos, some study tech videos for now. And this will change every 3 to 6 months, by the way, depending upon what everybody's interested in. So today we're going to talk about riding out our investment storm, our economy storm that's going on right now. This video is being filmed in June of 2022. And just so you know, I will tell you where my resources are throughout this video so that you don't think I'm just making this up or pulling it out of my head or pulling it off of Google. I do get my information from the top resources, the top experts, which is not me, by the way. I'm going off the screen and you can hear me. Please take notes. Always bring pencil and paper to my videos because I will throw things out there and you know, I'm a former teacher, so this is the way it does. You always want to take notes or have it ready in case you need to write something down. If you miss it, if you're on the road, then do not do that, okay? Be sure and pull over, take a screenshot, go back and watch the video, whatever you need to do. So we're going to talk about, of course, we're going to talk about what's going on in our world right now, what we can do to fight it. And Europe is on the top of the list, and it's causing a lot of drama, especially in the gas thing. So the best laid out schemes, according to A Mice and Men, if you've ever read it, which I have not, by the way, but I hear it's a pretty good book. So last year we added Vanguard FTSE Europe ETF to the top 20 of stocks to be good. Because of expectations for an economic recovery, then, you know, everything was good until Russia invaded Ukraine. And then in February, and this changed everything. European stocks plummeted in some markets, fall into the bear market territory, and then some recovered back in March. So this is June of 2022, so we're not too far off. Vanguard FTSE Europe ETF, which tracks an index of foreign stocks in developing European countries, is down 8.9% so far in 2022. So essentially wiping out upside recorded in prior months. As a result, over the past 12 months, the ETF return is down with about a 1.6% loss. I'm going to give you some graphics so you can see this in action here. Some of the stocks that are going on. And these are usually they're usually a couple months behind of when we're getting these figures. So they base these figures on January to March, the first quarter of 2022, which is when all this went on in Europe, by the way, because we got our attack in February. March, it recovered a little bit, so it's definitely different. It's better than the 3.0 average decline in typical Europe stock fund. And the MSCI, the EAFE, an index of stocks in developing foreign countries. And all these returns that I have up here on the screen are from April 8th. Ireland, Sweden, and the Netherlands were a drag, with declines of 13% or more in the 12 months, while Norway, Denmark, and Switzerland stayed above water, which is better than 11% return for the period. The ETF top countries in the UK, Switzerland, France, and Germany. Now, the outlook for economic prosperity in Europe is dimmed. The higher commodity prices for oil will hamper European growth, given the region's dependence on Russian energy. A UK-based economist at Vanguard says the Eurozone gets 40% of its natural gas and 25% of its oil from Russia, which are more than the US and the UK. Persistently higher energy prices affect the growth. Because consumers are left with less money to spend on other things. They also weigh on profit margins, leaving the businesses less to invest. Crude oil prices have climbed more than 30% at the start of 2022, and Rothbard has trimmed his expectations for European economic growth by 1 percentage point. He expects an average of 8% inflation in 2022 in the developed countries of Europe. We're watching this fund closely. In its favor, however, the fund's underlying index, FTSE developed Europe All Cap, which includes stocks of all sizes in 16 developed European markets. In short, the ETF offers broad exposure to the region. Another plus, the fund's 0.8% expense ratio is paper thin. And this comes from Morningstar, which is one of the places that I get my resources from. So here's some more of these stocks. This is from Morningstar Direct, MSCI, the S&P Dow Jones. And this is usually from the first half of the year. Like it's going to be like January 2022 to April 8th of 2022. So how do we ride out these storms? That's the question. It's a jumble of worries, including the invasion of Ukraine and the risk of recession is coming up. The interest rates just went up last week. This is filmed in like the middle of June 2022. And in recent months, the shares in value price high quality small companies, the sweet spot of T. Rowe Price small cap value have held up better than their small growing counterparts. Over the past 12 months, the fund's 0.9 loss is better than the 10.1 decline in the Russell 2000 Small Company Index. Manager David Wagner favors well-managed, profitable firms with strong balance sheets. He likes to buy cheap when the stock is low. You want to partner with a good company, and I'm going to make sure it's owned for a good 10 years. I've showed this chart, a lot of these charts on all of my investment videos. So if you are a stock investor, you can just see what the top ones are, the bargain stocks that are out there, whatever I'm showing you. Investment research firm Morningstar Classic Small Cap Value is a small blend fund, which means it holds up a mix of stocks with growth and value characteristics. If you have two similar companies and one is growing at a rate of 10% and the other isn't, but both trade for 10 times the earnings, that's not a trick question. You want the one that's growing, correct? This is not a trick question. So over the past year, the fund's energy stocks helped its performance. Wagner beefed up the fund's energy stake when oil prices fell to record lows in the early 2020s. In the recent months, those stocks have soared, and Matador Resources shares climbed 129% over 12 months. Magnolia Oil and Gas rose 121%, which makes sense, of course. And these days, Wagner says he's leaning into growth stocks as they swoon because small cap healthcare stocks have taken a beating over the past year. In recent months, added to the stakes in biotech firms such as Apellis Pharmaceuticals, and earlier this year, one of the experts says he picked up more shares in health tech firms, including Phreesia, which is spelled Phreesia, a patient intake and payment services provider. So since Wagner took over in the mid-2014s, in 2014, the fund has earned an 8.8 annualized return, which beats the 8.3% gain in the Russian Cell 2000 with 9% less volatility. All right, let's look at some more of these All right, so another one is including alphabet. Another one we want to talk about here is we want to talk about mutual funds, but I think I'm going to do that on another video. So that'll be my next video, is profiting from mutual funds. Stock and bond mutual funds. Okay, so we'll do that on another video because that's going to be pretty long. So I'm just going to scroll through some of these. I usually put this on almost all of my investment videos, whatever the current market's going on right now. So I appreciate everybody. This isn't going to be a super long one. Whoever stayed till the end. Let's end it on this because that's the main subject of our topic today. All right, I'll see you all in the next video. Thank you.